Canada is still above pre-pandemic levels in employment and in terms of GDP. So we're likely to see smaller marginal gains each month here because we're really forging new territory rather than getting back to where we were before.
I'm Natalie Nanowski. Welcome back to the Midweek Exchange, the show where we break down those big economic issues and explain how they could be impacting your daily life. I'm joined by Brett House, Scotiabank's VP and Deputy Chief Economist. Hi, Brett. How are you doing today?
Hi, Natalie. It's great to see you and good to be back on the Midweek Exchange.
All right. I want to talk to you today about last month's job numbers. After getting some good news on the job front last year, in January, Canada saw its numbers dip a little bit. What's going on there?
Well, you're right. It dipped a little more than just a touch. We had a big pullback in jobs in January with a loss of about 200,000 jobs in Canada. And that was, as you mentioned, after a very strong year of job gains in 2021. We see that, though, as a temporary dent because most of those job losses were related to COVID measures that restricted activity in very high touch service sectors like gyms and restaurants and tourism. And you also saw in the survey the number of people who are off work was highly tied to people looking after friends and family members with COVID-19 or other illnesses. At the same time, it's worth underscoring, even with that dent in January, we still remain at total jobs numbers that are slightly above pre-pandemic levels. So while that's an important retracement, the recovery in Canada hasn't been undone. We think it's temporary and we should see stronger job gains in the months ahead.
Okay, and let's compare those numbers to just south of the border because the US had a boost in employment. Is that really a sign, or is that possibly a sign that their economy is recovering quicker than ours?
Well, just to set some context, while we had a pullback in jobs in Canada because of our stricter COVID-19 public health measures, in the US, we had a blowout month with very strong job gains that went beyond all expectations. It's worth remembering, though, that while the Canadian economy is above pre-pandemic levels in terms of economic activity and employment, the US is still getting back to where it was in February 2020. So it's likely going to see a few months of stronger economic numbers than we've had in Canada because it's still catching up to where it was before COVID-19 changed everything. In contrast, Canada is still above pre-pandemic levels in employment and in terms of GDP. So we're likely to see smaller marginal gains each month here because we're really forging new territory rather than getting back to where we were before.
All right, so some good news for Canada there. And what should we be looking out for in the week ahead?
Well, we've got inflation numbers for January coming from the US this week, and next week we have Canadian inflation numbers. Both are likely to edge a bit higher to rates that are well above the target ranges for our central banks, and they're going to set the stage for the Bank of Canada and the Fed to start their hiking of policy interest rates in March to try to get those inflation numbers back under control.
Right, everyone is anxiously waiting for March 2nd. Thanks so much, Brett.
Thank you. Great to see you.
Great to see you too. And the Midweek Exchange will return next Wednesday.